This is my portfolio balance over time since starting my YouTube channel about 3 years ago. And so far we've done pretty well with consistent deposits and returns from many different stocks. Now so far we're doing very good this year as well. We're up 58.52% as of this morning, and here we are versus the major indexes, so we're absolutely crushing the market, about triple that of the S&P 500 this year. Now one of the big gainers that I had last year, and especially going into this year, was Crocs. I booked $13,649 worth of gains for Crocs stock, and I am not done. I am actually reinvested, and I'm as heavy in the company as I've ever been. Now, I originally started investing in them at $76, and right now we own them at $114, another 300 shares. But today we're going to talk all things Crocs. We're going to talk about the company's guidance that they put out just a couple quarters ago. We're going to talk about international growth. We're going to talk about penetration in different parts of the world and how fast they're growing on both a nominal and a constant currency basis, and how they're going to change over time. Because in my opinion, I think what's really impressive for this company is not the United States. If you look over the past 5 years here, Crocs is not that impressive on a 5-year chart. It looks kind of in an uptrend, sorta, but it ebbs and flows, and honestly, over the last 5 years, it's basically flat, if not a slight uptrend at best. But we're going to take a look at the top 15 economies in the world according to the World Bank and its data that it has right here, and take a look at search trends for Crocs and the company versus a lot of the major economies like China and the United States. So it's going to be a fun one if you're interested in Crocs, if this is a company you want to invest in, if you want to see everything you need to know about this company, this is the video for you. And I'm going to show exactly why I'm invested over $30,000, $34,397 to be exact, and why I have this as the largest position in my portfolio. It's going to be a fun one. Thank you guys so much for joining, and without further ado, let's go ahead and take a look into Crocs stock. So right here we have Crocs stock pulled up here in Qualtrim, and you can see over the last 5 years the company is up 630% over the past 5 years. Now it did had a big downturn, and this is when I bought in back in late 2022 when I was buying my original shares in the 70s, right around here. I think it was either August or September of last year, so right around a year ago. And then we had a big roar up, and now it's kind of flattened out over the last year. You can see it's still over a double up, but it's pretty much been flat for about 6 months now, and I'm back in the company for a couple main reasons. Now, one, they're starting to buy back that debt heavily, and I'll go over this a little bit more in depth here in just a second, but the company is getting more profitable, as you can see from their free cash flow growth right here. Last quarter, at the quarter 4 of last year, they put up $341 million in free cash flow, which is by far and away the biggest they've ever done, but also they're paying off a lot of their debt, and they will go back to share buybacks, but once again, more on that in a second. I want to talk about what I'm most excited about. The 2023 guidance that they put out in quarter 2, the upcoming quarter that they're going to report here in about 3 or 4 weeks from now, they're expecting 6 to 9% growth. So midpoint about 7.5% growth there. Not bad. Their margins are going to be pretty stable. That's around what they're normally at. And then you can see the earnings per share pretty much in line with what they're expecting for the other quarters. Now, as far as the full year goes, I think that they're going to beat these estimates. You see they're projecting around $11.50 on the midpoint in terms of their earnings per share on an adjusted diluted basis. Their margins are expected to increase slightly, but they're expecting about 8% growth for Crocs and about mid 20% growth for Hey Dudes. Now for Hey Dudes, I'm not so sure if they're going to do this. It hasn't been as impressive as I thought it might be. I love the shoes, and many of my friends and family do, but I'm not sure if they're going to hit those numbers of mid 20% growth numbers. However, I think this estimate of 8% Crocs revenue growth for the full year is going to be beat. Let me tell you exactly why. Now let's go ahead and take a look at the geography of Crocs brand. Now you can see that 61% of their revenue comes from North America, mainly talking about Canada, United States, and Mexico. Most of that coming from the United States, of course. And then their other two regions of the EMEALA coming at 20%, and then the remaining 19% coming from Asia Pacific. Now this is as of last quarter, the quarter 1 of 2023, but let's compare the growth versus quarter 4 versus quarter 1 going into this new year. Now 2 quarters ago, going back to quarter 4 of last year, you can see that they were growing in the Asia Pacific region 59% year over year and 75% on a constant currency basis. In the EMEALA section, they were growing 60% and 76% constant currency. So both of these are growing about 60% year over year. On a constant currency basis, they're both growing around 75% or so. Very, very impressive and fast growth. Now this coming quarter, they did slow that down a bit. you can see that constant currency, Asia Pacific was growing at 55%, EME ALA slowed down quite a bit to 25% year over year constant currency growth, which is a far cry from where this was just a quarter ago. Now, the reason why this is exciting me is because I look at these 5-year charts for Crocs, and right now I'm looking at the United States, and it's not that impressive. I look at this and I say, okay, this is nothing for me to get crazy excited about. This just looks like a regular everyday search chart. Well, if we go to the top 15 economies in the world, you can see that many of these are going to be at all-time highs. So let's go ahead and start, and I'm not going to start from the top. I'm going to skip ahead, and I want to start with India really quick. This is the 5-year chart for India. Now, why do I speak about India? Not only is India the top country in terms of population, they're like neck and neck with China. They go back and forth. They're basically the top by population. They have around 1.5 billion, I think, if I remember correctly. But they're also the fastest growing economy relative to their size right now. Now, they are growing far faster than China, far faster than the United States. And a lot of people are even projecting that India could be the top or one of the top GDP countries in the entire world over the next couple of years. Now, regardless of whether you believe that or not, what I do know is that India has a lot of people in its country. India has a lot of money flowing into it, and so far the search results for Crocs has been skyrocketing. Now, I just want to go ahead and start down the list in terms of the top countries. The one we're going to skip is China. I will go ahead and just show it really briefly, but just so you know, Google isn't really allowed in a country like China, so their search results are the only one here that are not really relevant, so we're kind of just going to skip over them. And I'm just going to go in order in this list from the top all the way to the bottom of the top economies in the world, and you tell me what it's looking like over the next 5 years. So looking at this 5-year chart, let's go ahead and start with Japan. The search results are at an all-time high. Looking good for Japan. Next on the list, we have Germany. How is Germany doing over the last 5 years? Well, you can see pretty much right here this summer, it's at all-time highs. Not even by a little bit, it's easily hitting all-time highs. We have the United Kingdom. This is a big economy at around $3 trillion. Where are they at? All-time highs this summer, looking very good for the United Kingdom. We already looked at India, but just to show it really quickly again, India is not only going up, it is soaring higher, and in my opinion, other than China, that's probably the most important international country to worry about, in my opinion. What about France? France is a huge one. France currently has all-time highs on the search records. And like India, it's not a little bit by all-time highs. It is absolutely skyrocketing. Now, right next to France, we have the great country of Italy. I'm Italian, so my family has some heritage there. Now, they did have a big peak back in 2021, and they did have some pretty high numbers in 2022, but they seem to be matching, if not slightly exceeding that, from the 100 search results in terms of the top 1 to 100, the like percentage rating. The Google is putting it right at about all-time highs for Italy, so looking good there. Next, we have our neighboring border. We have Canada, just north of the US. Where are they at? You guessed it, all-time highs. Next, after Canada, we have South Korea. What about South Korea? How are they doing? If you look at their 5-year chart, they are at, you guessed it, all-time highs. This summer is going to be crazy for Crocs if any signs of this, it looks anywhere like these search results. Now, one of the only few on this list that do not look impressive is Russia. Now, I think that's a given, and I think that's pretty understandable. Why? Because if you look back, last summer, it was kind of not so great. The last time we had a big search results was the summer of 2021. Obviously, that was before the Russia-Ukraine war, and I think a lot of its citizens are not worried about buying things right now. They're worried about surviving the war. It's pretty obvious. That's kind of a pass, and Russia isn't the biggest customer of Crocs anyway, but just so you know, they're not all perfect. Of these top 15, not all of them are the absolute best to look at. But that's the first one we've seen so far, in my opinion, that hasn't either been right at or very close to all-time highs. What about Brazil? This one is a slow uptrend, but this is nearing all-time highs. Right now, sitting at about an 88 on the search results. It hit just 100 just a couple months ago, earlier this year. Next on Brazil, we have Australia. Australia in the last 5 years, it is nearing all-time highs, but right now it has not peaked there. It did peak earlier this year, just a couple months ago at the start of the new year around Christmas time, but we are edging way beyond the records of last summer. When last summer this number was hitting around 30, 35 or so, Today, we're edging up towards the 60s and 70s. After Australia, we have Spain. In Spain, over the last 5 years, it has seen a big uproar. Last summer, seeing around 60, 65. Today, we're reaching new all-time highs. Do you get the point? Look at all these different countries that we looked at, these top 15. And there are so many, basically all of them except for maybe one or two, that are all at all-time highs. And like Spain, the one we're looking at right now, it's not reaching all-time highs by a little bit. It is absolutely going vertical. Now, I'm not sure what is causing this drive. I'm not sure why exactly the international expansion is taking off so fast. I think it's probably due to their new sandals business, or maybe it's just from the new marketing schemes, or maybe it's social media like TikTok spreading like wildfire. But overall, over the last 5 years, the US is having a little growth, and that's great. But that's not really where the opportunity is here. Countries like Spain, countries like India are ones that are really going to drive this company into new all-time highs. So when I look at this, and I see that the company is likely going to get a lot more sales internationally and a lot more profits from these drivers, it leads me to believe that share buybacks are going to come back in a big, big way. Now, this company took out a lot of debt to buy Hey Dudes. Now, once again, I said I would come back to this. So looking at the debt pile, when I started investing in this company, they had around $2.5 billion of outstanding debt. They got all the way up to 2.8, almost $3 billion from acquiring Hey Dude, its new business that it owns over the last year or so now. And that 2.8 billion has declined all the way down to 2.19 billion in just 1 year. In 4 quarters, they bought back over $600 million of that $2.8 billion worth of outstanding debt. And the company has said that they are looking to deleverage to their long-term average. Now, their long-term average at the year end of 2021 was a 1.1 times gross debt divided by adjusted EBITDA outlook. Now, basically, long story short, that means they don't want to have a ton of debt on the balance sheet because it's a big risk. I agree. When I originally bought this company, 9-10 months ago, I originally talked about the biggest risk for this company being its massive debt load. Well, every quarter, that is becoming less and less of the story. At $2.8 billion, that looks really scary next to its cash pile, the little green number right here. Now, every quarter, it is getting closer and closer to being a more realistic rate. Now, not only did they buy back a lot of that debt over the last year, but the company is reaching new all-time highs in terms of its free cash flow. If we look at it on an annual basis, it becomes more apparent. Over the last year or two, free cash flow has exploded. This company reached a big high in 2020 at around $200 million, and then the last 2 years have been $500 million. So if they put even a reasonable percentage of this $500 million in profit towards this $2 billion of outstanding debt, which once again, they're likely going to hit even new all-time highs this year, maybe reaching $600, maybe $700 million on free cash flow, they can pay back this debt in no time. So fast they can pay back this debt and get back to the point where not only did they de-risk, did they deleverage the company, but they can start buying back shares in a major way. Because the shares outstanding for this company, until they made the acquisition right here at the beginning of 2022, this company was buying back shares left and right, just trickling down every single year, and over the last 10 years, despite this acquisition, has still bought back around 3.4% of the company every single year compounded, despite having this acquisition increase shares outstanding. So I don't think it'll be long before they pay off the massive amount of their debt. They're a lot less risky of a company, and they'll start buying back shares left and right. But more importantly, regardless of whether they do that or the timing of when they buy those back in terms of stock and debt, I think that this revenue chart is going to explode. They haven't reached $1 billion a quarter yet, but I don't think it's very long. I think it's probably Q2, Q3 of this year that they reach $1 billion in revenue per quarter. Now, they're projecting that they're going to grow around 7-8% for Crocs. Now, I'm not so sure about this quarter here in Q2. But once they guide for the upcoming quarter that we're currently in Q3 and Q4 this year, I think it's going to absolutely dominate. I think 7, 8, 9% growth, it's just not happening. I think 10% minimum on my side if these Google trend charts are even remotely accurate. Let's put it this way. These Google trend charts are so strongly in favor of Crocs in terms of its international search history, and I'm assuming the sales as well. If these sales don't come in at least remotely decent, if not relatively strong, I will pretty much write off Google Trends forever. Because honestly, these type of search results are not slightly higher, are not on a little bit of an uptrend. They're going almost parabolic. Versus last year, like I said, in my opinion, the most exciting one here is probably India, June, July of last year, it was floating around 50s and 60s. At its absolute peak, it's at 65. And then June and July this year, we have anywhere from about 65 all the way up to 100 where we're at currently right now. So that is why I'm so excited about this. And if you want to zoom in on a chart to see just over the last year, comparing to last year, you can see how much better it is versus last year. Like I said, significantly better, hitting those averages on this chart right around June, July, around the 60 mark, and now we're just way higher than that. So thank you guys for watching. I appreciate it. I'm invested in Crocs, 300 shares. I'll plan on selling my shares once they go a lot higher, 140, 50, 60, who knows. I'll kind of give you an update on my exit plan and my strategy there. But right now I'm buying 300 shares of the company, and I also own one little teeny tiny call option for $1,000, just a little fun gamble for their earnings. But thank you guys so much for watching. Stay tuned and follow along for me so you can see my performance for the long term and my overall balance in my portfolio as I track it every single month. But thank you guys so much for watching, and I'll catch you all next time.